Welcome to Cryptoland. I'm Krishna Andavolu. We're talking about the new Wild West of alt, meme, scam, and shitcoins. Investing in altcoins can mint new millionaires or leave investors bottomed out. These coins can be based on memes that take on a life of their own, or they might fit into the new Wild West of decentralized finance, a flood of highly complex money-making systems that can open investors up to new types of hacks and scams. Here to talk about this with me are Motherboard's Edward Ongweso Jr., founder of one of the OG altcoins, Charlie Lee, and cybersecurity expert Dan Guido. Thank you guys for joining me today. We've got a lot to cover because there's kind of a lot of different discrete elements to this whole conversation. And the first one is really altcoins, right? Like there was Bitcoin and then other cryptos came along. Charlie, I want to start with you because holy shit, dude, you created a fucking cryptocurrency that's worth billions of dollars. Like, what does that feel like?
It's pretty surreal, actually. I mean, initially I created it just for fun, right? So I didn't really expect anything from it. But when it hit like $1 billion market cap, I was like, wow, this is actually for here to stay. And that was pretty surreal, especially when I was able to buy like a plane ticket to go to a Bitcoin conference to talk about Litecoin and Bitcoin. And that was just like, then I just realized I just created my own money that I can use to buy stuff with, which is pretty surreal.
What were you doing beforehand?
I was at Google for about 6 years working on, I was software engineer working on Chrome OS, YouTube, and Google Play games. Been a software engineer for a while.
And so you're like, screw you, Google. I'm going to make my own money.
Pretty much. I actually created Litecoin when I was still working there.
Oh, well, I hope on separate machinery, right?
At home.
Yeah, okay, good. All right, good.
I did not use Google resources.
You started an altcoin. Tell me what that was like, why you did it, and what was the reaction?
Yeah, this was in 2011, about a year and a half after Bitcoin started. Even back then, there were quite a few scams. They were called like pre-mine scams. There were about a dozen or so altcoins that were created with a huge pre-mine, which is like a stash for the founder. So if they manage to make the altcoin popular, then they can probably make a lot of money from the coin. So Litecoin was born from the idea of trying to make everything fair. With no pre-mine, everyone can mine Litecoin from the beginning, from the get-go. There's no secret mining or anything like that. So I think that's one of the reasons why Litecoin succeeded, was because of how fair it was.
You know, Charlie, I wonder if you could help me very simply, like what is the definition of an altcoin?
I mean, initially, an altcoin is anything that is not Bitcoin, right? A fork of Bitcoin, a cryptocurrency that is not Bitcoin is considered an altcoin.
And did you think that like your Litecoin would then rise or give rise to like the birth of other cryptocurrencies? Because as I understand it, like that happened too, right?
So I created Litecoin in 2011. Back then, there were about a dozen other altcoins. Litecoin managed to become the second most popular coin after Bitcoin back then. And in 2013, there was a huge rise of like a few thousand different altcoins. Most of them were forked from Litecoin. And obviously, there were a lot of scams. Some of them did succeed and differentiate itself from Litecoin and Bitcoin.
Now, what was the process like itself, like designing the software? Like, did you just copy paste from Bitcoin? Like, did you make specific differences that, you know, yielded a more fair system? Like, I guess the two questions I have is what inspired you to do this? How did you do it? And like, what was the reaction?
Yeah, it was, I mean, to be fair, it wasn't that hard to fork Bitcoin and make some changes. I think the major change was to use the script proof of work, which made it so that people can use their ordinary computers to mine Litecoin from the beginning. So back in 2011, Bitcoin was already mined by GPUs. Using CPU to mine Bitcoin wasn't worth it. You're not going to get any Bitcoins. So making it so that Litecoin was CPU mined really helped it succeed, because anyone can mine Litecoin. In the beginning, miners are the early adopters. And those are people that are out there pushing for adoption of Litecoin. So that was the key difference between Litecoin and Bitcoin. There are other small changes like making the coins 4 times as plentiful, making blocks 4 times as fast. It makes Litecoin feel faster when you're transacting. Back then, when I started, it was kind of a fun side project. I didn't really expect much of Litecoin, and it kind of just became what it is today. Totally didn't expect it.
Yeah, what is it today? Like, is there a market cap valuation to it? Like, is it your full-time job now?
It is my full-time job. The market cap valuation Litecoin is about $15 billion today. The crazy thing is, when I started Litecoin, Bitcoin's market cap was about $100 to $200 million. So Litecoin is, what is it, like 150 times bigger than what Bitcoin was when I started Litecoin. So that's pretty crazy to think about it that way.
What does it feel like? I mean, I don't think I've actually ever met someone who started a coin that was successful and like real in the sense of widely adopted. What did it feel like? Was it like cool when people started, joining?
It was pretty surreal. I think it really hit me when Litecoin got to like $1 billion market cap. Back in, I think it was 2013, maybe 2015. And I was able to use Litecoin to buy stuff, right? To use a coin that I created and using it to buy like a plane ticket. I remember buying a plane ticket. You go to a Bitcoin conference at MIT to speak about Bitcoin and Litecoin. And that was pretty crazy to think about it.
And then how do you react to people who instinctively call coins that aren't Bitcoin shit coins or altcoins or something like that?
I mean, I think the term altcoin is fine. Shitcoin is, a lot of people call Litecoin a shitcoin, or at least a lot of people call everything not Bitcoin a shitcoin. I think that's fine. I mean, it's all fun and games. Yeah, but there are a difference between like a coin like Litecoin, which is 10 years old and has a established track record and being used as payments worldwide, versus a coin that was created like a year ago that has really nothing going for it, but is being pumped and dumped. Most of them actually failed. Dogecoin was created in 2013. It was one of those altcoins.
Was it created from your code, basically?
It was actually forked from another coin that forked from Litecoin.
I see.
So it's definitely a derivation of Litecoin. And it also used the same mining algorithm as Litecoin, the script proof of work.
Well, so I think Dogecoin, Edward, I want to ask you about this because you've covered all of these coins, et cetera. But like Dogecoin is the one that I know as sort of like a meme coin. I think primarily because it is a dog coin, like it has a jokeability to it, but then a very real and serious element, which is it's worth a lot of money now. So in covering this kind of stuff, what is the landscape of altcoins?
Yeah, there are altcoins that have the use values, utility, either because they're offered as another way to build applications or provide services on another blockchain or on another platform. But then there are also coins like Dogecoin, which are largely just memes or ways to kind of speculate and accumulate money, either because of like organized activity from like a pump and dump, or either because it's a joke that people are in on and are interested in. And I think, there are coins like Dogecoin, like Shiba Inu, which are coins that kind of have, low value at first, right? Fractions and fractions and fractions of a penny. And then what happens is usually a public figure in one way or another boost it, right? Whether it's using it to do a transaction or a transaction, or actively boosting it on social media or on some other platform that gives rise to it, attracts other people. But again, since it's a coin that doesn't really have a use value developed for it, it's just like a storehouse for value until it deflates.
And so that's like basically the big criticism against some of the altcoins out there, maybe not Litecoin because it's so widely adopted, is that it's not actually decentralized because just a bunch of people have, like a few people have it, are trying to push it on other people, and that is like its Ponzi scheme-esque reality, right?
I mean, yeah, I think that's a concern that people have generally with crypto assets is, cryptocurrencies is, who owns it or what's the distribution like? And is it clear when you're getting into a coin or some project, who is pushing it, who is pushing the value? What's pushing the value? Are you getting in on something that's just going to be dumped? Or are you getting in on something that people are building or trying to use to build some new system or some new ecosystem or some new product?
And this is a simple question, but like when we talk about altcoins, and Charlie mentioned it very early on, like even in the early days, there were scams. Why is there such a sort of married concept of like altcoin to scam? Like why are those things thought of in the same breath?
I mean, I feel like part of that goes down to the early reaction that a lot of Bitcoin adopters, advocates had to any alternative to Bitcoin. But there has been, I think, from the beginning, because of it just being a constantly developing technology or space, in addition to lack of regulation, like there's been ease, or there are ways for you to develop schemes that take advantage of people looking to make money, right? Or people who create a coin or create a service that has some loophole that allows you to exploit it and make a lot of money and pull it out of there.
Charlie, you were talking about early scams too. So what were the early scams that you were talking about?
In 2013, people were able to create, people created thousands of altcoins. And most of those altcoins really didn't provide much value. And the scams were just creating coins, similar to in 2011, with a lot of creating coins with a big pre-mine and try to get it on the exchange, or even using your own coin to bribe an exchange to list the coin. Or if it's on the exchange, people would speculate and buy and pump up the price. And when the price is really high, they would sell all their coins. They would dump it on the market and basically cash out millions of dollars. And that's like the typical scam in 2013.
So that's a pump and dump. That's like a penny stock pump and dump, like Wolf of Wall Street style thing, right? That sounds simple enough because could put like a clear referent to it. So pump and dump is your first scam.
Yeah. And that's because there's just a lot of money involved, right? Crypto is a booming space even back then, and just a lot of people made a lot of money from Bitcoin, from Litecoin, from Ethereum, and there's just a lot of money floating around, and people take advantage of it. Scammers are like sharks, right? They're just circling and looking for opportunities to make money. That's just the kind of the natural way of things.
And that kind of rubs up against the more idealistic versions of what we're doing here with blockchain technologies and crypto, like decentralized. The idealism that we can rebuild the economic system that doesn't work for everyone based on a new technology, a new kind of software, and a totally decentralized world, right? Peer-to-peer, not like a government that has an army that makes something worth something, but our values as people. So that at its birth, it's interesting to hear that like even the first alternative coins invited a kind of scamminess, even though behind it is like, let's make a whole new world.
I think what Charlie was saying before about how he was trying to explore different technical parameters for Litecoin versus Bitcoin, change the block size, change the hashing algorithm, change the distribution, change the governance. A lot of people that created altcoins back then, they didn't change anything. The whole thing was just about changing the investor sentiment around the technology, not about actually inventing something new. But I think as humans and as regular consumers, we're not in a really good position to differentiate between the two. It's hard for someone to understand on the outside who's actually doing the innovation and who's not, because at the end of the day, both of them use the same words to describe it.
And those words are?
I mean, that it's a brand new field and that you can make money doing this kind of thing, and that it's a revolutionary technology that's going to change the world. So you hear about your friends that, oh yeah, I put my money in this thing, I made a whole bunch of money, you want to get in early, you got to figure it out before somebody else does. So a lot of people are on the hunt for these kinds of unqualified opportunities to invest. And because there are a lot of people out there that have that FOMO, that are motivated by keeping up with their peers, they're going to throw money at things that they probably should not have.
And that's like these early altcoins where maybe it wasn't as sophisticated as a marketplace. And what this strikes me, and maybe Edward, you tell me about it, when you think about meme coins, like a Dogecoin or otherwise, people are like, oh, we get it. Like this is just pump and dump, but if we put like a dog on its face, or if we you know, it's sort of like a knowing nod to the concept that when you create an altcoin that isn't based on really on any new technological advances in the software, that what you're doing is kind of a high-tech pump and dump. But if we own that by way of its memification, then we're, you know, doing the honest work of making money.
It's a collective delusion.
Sure, yeah, exactly. So that's like the meme coin, like you meme it into existence. Do me a favor, Edward, what is the definition of a meme coin?
Well, yeah, I think it would just like define a meme coin as like a cryptocurrency that doesn't really have any sort of use value, and its origin just comes in a meme, or comes from a meme.
So the Dogecoin is a meme coin because the Shiba Inu image was a meme,
Right.
and then someone was like, let's make a coin attached to that meme.
Right, exactly. And I mean, like the creator himself will tell you that too, right? Like, and he has talked a bit about like concerns that he has had with the fact that the meme coin has like, you know, has multi-billion-dollar market capitalization, or that it's being like propped up or inflated in its value for so long by so many people. Yeah, I think, you know, just at its root, it's, you know, there's a meme there and a bunch of people have done it together, like you said, in a collective delusion to make money.
And Charlie, like, how do you differentiate what you've made in Litecoin versus a meme coin that has a huge valuation like Dogecoin? What is the difference, you know, qualitatively?
I mean, I think a meme coin is something that it's kind of like a fake it till you make it kind of coin, right? So if everyone believes that Dogecoin has value and puts their money into it, in the end, it actually does have value because it's whatever people believe in it, right? So Dogecoin is kind of the grandfather of meme coins, and it's really far exceeded like most people's expectation of what it could become, right? But that it's actually succeeded, right? It's actually here to stay. So in that sense, it's not much different than Litecoin today, right? It's people are using it, people have a lot of money in it, and they're using it for payments, which is pretty cool. But it's more, the difference is how it started, right? So the power of meme is actually really strong, right? It managed to kind of make itself succeed just because of the meme, right? It has nothing else behind it. But now that it's successful, it's here to stay.
Are there other meme coins that didn't become successful, and is that what you call a shit coin?
Well, there are thousands of meme coins today, right? There's a lot of derivations of Dogecoin, right? There's Shiba Inu, which happened to also become really worth a lot, which is pretty amazing in its own right. But then there are like tons of dog-related coins. There's one named after like Elon Musk's dog. It's pretty crazy, right? It's the idea behind all of them is if Dogecoin can succeed, why can't this one, right? If everyone believes this other coin, meme coin, can succeed, then it can go up 100 times, 1,000 times in value also.
And I guess there's like not a lot of startup costs to starting a meme coin. You just copy paste some code and then set it, like tweet it out or something. Yeah,
there's, I think the cost is marketing costs, right? You try to, these days, like on Twitter, I get tens of thousands of people replying to my tweets with trying to pump their meme coin, right? Just saying this is the next Dogecoin. And just a lot of marketing and a lot of money behind marketing for these coins to try to make it succeed.
So there's a whole cottage industry of like social media managers who are basically copy and pasting the little rocket ship emoji with their like new meme coin, whatever you call it. So that's one side, right? That's the side that's producing the supply of meme coins, whatever that is. Who's investing in it? Who are the people who are like, oh, cool, it's worth 0.0000001. I'm gonna buy, I don't know, armpit coin or whatever you want to call the meme coin that I'm gonna start.
I mean, it depends.
Speculators, right? Or just new people in the space. They see a coin like Dogecoin or Shiba Inu really take off. They're like, if I invested $1,000 in this other coin, if it goes to $1, then I can make $1 million. Like it's a gambling lottery mentality.
Mm-hmm. And how big is this casino?
I mean, at this point,
I would say
I don't have specific figures around it, but I mean, it's hundreds of billions of dollars.
Yeah, wow. Because there's like just thousands of these little shit coins around that could, if enough energy got behind them, go to like, you know, $50 per coin.
Yeah, I think the technical innovation here, it's funny because I framed it around, you know, Charlie's technical innovation around the technology before, but this is really technical innovation around the branding, around the marketing. And it's ultimately possible for somebody that's actually experimenting with the underlying technology to brand it the same way and use that to kind of grease the gears for marketing it and getting community engagement and building integrations with it and getting it used in the real world. But for the most part, people that have adopted this kind of special marketing technique aren't doing that. But it's got value on its own.
And these are people who are just trying to make money on the pure arbitrage, on like buy it low, sell it high. Maybe if you put your chips out there on enough of these little shit coins, that maybe one or two will hit gold and you'll make a whole bunch of money back.
For the most part, yeah. I mean, the multiples, when you do figure something out that's very early in its development and then it gets pumped later, then yeah, you stand to make a lot of money. But there's also going to be a lot of people on the other end of that that are going to lose money. And where you're going to hear, you're going to get the confirmation bias of, yeah, I got this massive return, I'm a millionaire now. There are many, many more people that have the opposite story that you probably aren't going to hear about as much.
Because they're not like, tweeting about it.
No, nobody's happy when that happens. You read the sad stories of somebody who, lost their savings on it and did not succeed in their attempt to speculate.
And so this is like the basic buyer beware of all of this, which is like, there's no fundamentals to think about, so you can't do the kind of analytics or just analysis that you would on basic investing. Like, oh, does this company have a good product? Does this company have a market that it can do well in? It's just like, will it become popular?
Yeah, the signals are really poor. It's walking around in a dark room with a flashlight. It is not finding the light switch and turning it on. So a lot of people are being misled by information they don't really understand how to interpret, and they're making decisions based on guesswork, which means there's going to be a lot of what the crypto community would call bag holders at the end of the day. And there will be a few people that have figured out where the light switch is in that room and are able to turn it on because they've invested incredible sums into their own technical capabilities to monitor what's going on. But you as an individual with a Gemini account or a Coinbase account, probably not.
And so I guess maybe the worst way of thinking about the whole marketplace of shitcoins and meme coins and whatever is that it actually needs the people holding the bags for other people to make money, right?
Yeah, I mean, that's how it is for a lot of speculation at the end of the day. I mean, we see that, for example, with tech unicorns, right? Some like investors will leave other people holding the bag when, after IPO day or after like some later point where the business model is no longer, where it's clear the business model is unprofitable. And similarly here, with speculation, for you to make money, obscene amounts of money, a lot of people have to buy in. A lot of them way too late to make any real money, and then you cash out.
And then you cash out because you made the thing, and then maybe it goes down because you hold so much coin in it. And that's what you're talking about, pre-mining, right, Charlie?
Yeah, well, the thing is because these meme coins, there's no actual value being created. So if someone's going to make a lot of money, then a lot of other people are going to lose a lot of money, right? It all has to balance out because there's actually no real value created. And that's what happens with these coins, right? And with all these ICOs that happened in 2017, where a lot of people get tricked into putting money into these coins, thinking that they're going to become millionaires. But in reality, they're just putting money in at the high, and people who got in early managed to cash out, right? So in that sense, it's more like a Ponzi scheme.
Yeah. Is there like an event horizon of when a meme coin goes from no value being actually created by its existence to, oh, it's decentralized enough people have it, that it is a functioning cryptocurrency like a Litecoin or a Bitcoin or an Ethereum? Like, what is that? How do you go from being a shit coin to a real coin? There's no answer to that.
It's tough to say. Yeah. It's like, how decentralized is the governance behind it? Is there just a single person, or is it a group? Is there some kind of decentralized autonomous organization that's making decisions for it? I would also think about the holders of the currency. If it is decentralized ownership, or a DAO or something like that that's making those decisions, how is ownership distributed? Who owns those coins? And is there really, at the end of the day, still just one person that's making all the decisions? So I think those are some of the factors that you might want to consider if you're trying to figure out what's legitimate versus what's not. But again, it's all really these are poor signals. And a lot of it is just going to be luck of the draw. So, I mean, generally, by the time that you hear about a meme coin, it's like too late. Your speculation is, you didn't get in early enough. You probably shouldn't participate. On the other hand, the likelihood that a meme coin is going to transition into something that people use on a regular basis, like you find many reputable exchanges use Dogecoin now, like the likelihood of that happening is pretty low.
Well, now let's move to like where this kind of all cashes out to me, which is like, it's not just basic buy low, sell high. It's let's try to make a decentralized financial system. Let's try to make decentralized financial instruments, smart contracts, blockchain, the stuff that I honestly I do not understand, but is also like a huge marketplace, a huge place for risk, but also a huge place for reward. So Dan, tell me about that.
Sure, yeah. So what happened in the meantime, since Litecoin was created and since a lot of these altcoins popped up, is those are all layer 1 blockchain protocols. People have created a system on top of that called smart contracts, where at its core, it's kind of like, think about if you had a spreadsheet on Google Docs and everybody else did too, you all shared the same spreadsheet, and there was a way to make sure that knowledge of what's on that spreadsheet was consistent across the entire world. That's essentially what a lot of these smart contracts are. When you think about tokens, and on the Ethereum community, they call it an ERC20 token. They're a framework to create new altcoins. It's lowered the barrier to entry for creating new altcoins to the most minimal it possibly can be. Writing an ERC20 token is maybe about 500 lines of code. And at the end of the day, what they do is they get consistency across the entire internet of who owns those tokens and what methods are available to transfer them to others.
Okay. I think I need you to explain that to me again, because I don't really get that. Because here, okay, I'll put it this way. Let's go back, because like the only reason I know about like the exotic, esoteric Wall Street stuff is because it failed. You know, so like I watched The Big Short, and now I can tell you what a collateralized debt obligation is, right? Because Margot Robbie told me about it in the bathtub. But we only know about these things when they fail, right? If they hadn't, I probably wouldn't know what they are. So I understand that that's like a bet that I will take because someone made a product and said, hey, we're going to take all of these mortgages and you just buy into it and they're going to go up because we know they go up. So explain it to me like that.
Sure. So at its foundation, right, you have this layer of smart contracts now that you didn't have before. And with them, you can create what you call like an automated finance bot, something that's a little robot that can perform a transaction. Maybe it can take one kind of currency and swap it for a different kind of currency at some sort of exchange rate. And that's a program that lives on top of the blockchain.
Okay.
Now, with that, you can build ever-increasing complexity of financial instruments. You can start to rebuild the entire financial system on top of these small little building blocks. But what you get is the entire financial system intermediated by computers. And as we all know, computers are wonderful at never crashing, never losing your data, never getting hacked. So
no, they're not.
Yes.
Just want to make sure we all, okay.
as a kind of field, so yes, they're automated finance bots, and people are using them for these extraordinarily complex tasks. From another perspective, they're also like finance piñatas, where other people can walk up to them and kick them the right way, and candy starts to fall out. So it's definitely created this extraordinarily high risk industry of financial instruments that people are playing with right now because there's lots of reward, but also people don't know how to differentiate between like a robust finance bot that's constructed with like metal and bolts versus a finance bot built out of cardboard that's got like a pink smiley face on the front.
Now clear this up for me. How is this, what you're talking about, different from just a peer-to-peer meme coin?
So when you're dealing with blockchains like Litecoin, what you're talking about is transferring value from one person to another. I can take a token, I can take a coin and I can give it to you. But what you can't do is you can't like store information outside of that. Like if I wanted to make a credit risk decision about you, if you were applying to get a mortgage from me, I would need to look up your profile and figure out like, well, has this person paid their loans on time in the past? And what kind of information can I gather about them? Or is there some database that I can look up? What a smart contract lets you do is maintain that sort of other data stores and then make decisions inside of the code about what to do with it. So it allows extraordinarily more complexity when you're building these sorts of things. Instead of just, I've got money in my pocket, I'm going to give it to you.
So it's like a future, like if then on a bunch of different data.
Yeah, I mean, it's a computer making programmatic decisions, and because it's a computer, it can do this based on a lot of different data. It can do it based on market signals of like, what is the price of X token right now on a different exchange? Or it could do it based on some real world data, like what is the current value of the power coming into my house? That's not really a possibility when you think about a layer 1 blockchain.
I think I get it. So why does this exist?
Well, we have mostly Vitalik Buterin to thank for that. There were a bunch of people that put their heads together and built a programming language, a programming system on top of the Ethereum blockchain a few years ago. And from that, there's been this Cambrian explosion of people doing a lot of research and a lot of interesting technology development with this new smart contract system. And now you're seeing a lot of people compete based on like the language that you use to program those systems, the speed of execution of those systems, the integrations and the data sources that are possible to feed from. And you're also seeing a lot of people build just really complex financial instruments with them that is carrying that whole field forward.
Ed, one of the gentlemen you met in Puerto Rico is one of these guys, right? What was he like? What was his deal? Why?
So, he got into crypto largely through luck in raising a lot of money early on.
This is Brandon.
Yeah, Brandon. So Brandon got into crypto early on a few years ago, getting lucky, raising his money, and then eventually settling on SafeMoon and, exiting that after he had about, $800,000 left. And then from there, starting to get involved in some of the decentralized finance instruments to try to make even more money. So his favorite, or the main ones he was going for were centered around, yield farming and staking. And so this is basically like you go to some platform, and the idea is you're buying up some of their tokens, and then you're agreeing to store those tokens with them for a set amount of time. And they'll reward you with some, other token that, either it could be a governance token to have some say in the way that the platform itself is run, or it could be a token that could be exchanged for the actual token itself that you just locked in. So you lock that in, that provides some underlying liquidity for the platform itself, for other people to come in, buy more tokens, do the same thing. Also have an incentive to keep, providing liquidity for the platform to do other things. Like maybe it's lending, a bank.
Corporate paper, right?
Yeah. Yeah, essentially. I mean, it's like the problem is like, okay, if you have this and you want to decentralize finance, how do you get capital? Because that is the purpose of a bank, right? To be a large reserve of capital. And one way to do it is to figure out different ways to encourage people to say, like, I'll park my money here, or I'll park tokens here, and then I will do it and lock them up so you can go out and you can exchange them, you can loan them, and you give me like a higher than average interest rate, or give me some sort of incentive to actually stay.
So guys like Brandon are making these sorts of smart contract-based products that are together layering on top of each other to create like a new decentralized financial system.
Yes, yeah. So there's a bunch of small little building blocks, and there are a lot of people in charge of those independent small little building blocks. And the challenge, I think, from a trader's perspective is how to navigate connecting all those things together to produce the highest returns. And that's what a lot of people are trying to do, but they're extending themselves extremely deeply into these different building blocks. You can string together, 20 of them at a time. What happens when the piece in the middle of your 10 different transactions that you've performed, what happens when that one breaks or it doesn't perform the way it's supposed to? And you might have to hold tokens or hold value in all kinds of exotic assets where one of them could be untrustworthy and somebody pulls the rug on you, and then your entire trading system falls apart. So it's a very risky game, and again, it's a lot of people walking around in a dark room with flashlights, and there are very few people that have invested in the technology enough to know what's going on end to end. In fact, I don't know if there's anybody that knows what's going on end to end for specifically decentralized finance.
Now, I want to talk about what you do and how security comes into it, and even just like how can you even come face to face with one of these products? Like, for instance, I in 2007 couldn't really get a collateralized debt obligation unless I worked on Wall Street, right? Like, it wasn't a retail product. However, what I'm hearing from you is, like, in a sense, this is kind of a retail product that you can find. But I want to ask you, Charlie, Do you mess with any of this stuff? Right? Because like you were early in crypto, obviously, and you made a really successful coin. Are you into this kind of now decentralized financial product stuff because, hey, it's the natural next step? Or are you like, fuck that shit?
I played around with it. I definitely play around with it with like yield farming and stuff, decentralized exchanges, exchanging tokens for other things. And but I honestly don't see it really succeeding the way people think it's going to succeed. It's because it's way too complicated, right? Like the smart contracts can be very powerful, and people are just not very careful when they're creating them. There are bugs. Complicated smart contracts interacting with other complicated smart contracts create a lot of edge cases that people take advantage of. So every day you hear about a rug pull or a hack where people lose millions or billions of dollars. And it's just hard for something to really succeed when it's such a mess. I think it's going to take a long time before people start like really be serious about creating smart contracts that are safe. And I mean, the problem is people are just throwing way too much money into a beta or even alpha system, and everyone's getting hurt. But I guess it's good for experimenting. But right now, it's kind of a mess.
Okay, let's actually do something for me, because this is all based on smart contracts, basically, which is a contract that's a piece of software that actuates whenever you code it to go, right? The concept of contracts, as I understand it, it's a piece of paper that you and I sign that agrees on a certain set of things that you'll do and I'll do. And if you break it, there's enforcement mechanisms, right? I can take you to court. You're making a promise that has like repercussions. What are the repercussions that are, like how does a smart contract work if there's no magistrate or third party to adjudicate whether or not someone fucked up and enforce the written rules of the contract, right? That's, I mean, I didn't go to law school, but that sounds like a 1L thing, right?
Yeah, the idea behind smart contract is code as law, right? So whatever the code you're running, whatever you do that works with the code is what would happen, right? So if the code has a bug where someone can steal a lot of money from the pool, then that's it, right? Because if someone steals a lot of money, there's no recourse, right? You can't get the money back. They stole Ethereum or whatever other token. They can go do decentralized exchange and exchange it and basically cash out, right? So that's the problem with the smart contract is it's like code is law, and code, as we all know, always has bugs in it, right? Nothing is perfect. The best example is the first kind of big hack in Ethereum smart contract. This is way back in 2016, I believe, when the first like large DAO was created. It's called the Dow Hack, right? So the DAO stands for Decentralized Autonomous Organization. The idea is that people can put money into this smart contract system where then they can vote on where the money can be deployed, right? So the idea of the DAO is it's a fund where they raise like millions of dollars on Ethereum, and eventually the fund can be used to invest in other things or spend it on different projects, right? So what happened with the DAO was there's a bug in the code, and someone managed to basically deplete the whole DAO fund. This was, I don't know if you guys remember, this was about, I think it was a few $100 million back then, but it was big. Almost 30% of all Ethereum market cap. So it was a lot of money relative to the size of Ethereum back then.
Who did that? Did they catch the criminals?
No one knows who did it. But what happened was Ethereum actually hard forked to kind of reverse that, to take the money away from the hacker. And that was the only way to kind of take the money back, because they had to change the code to effectively take the money back from the hacker.
Okay, so I learned something very important then, which is that code is law. So we call
Unless you fork the blockchain.
Right, and then that's basically going back in time. Is that what that means?
Yes, pretty much.
But anyway, so code is law. So these contracts, we call them smart contracts, but really it's computer code.
Yeah.
And it exists. And if there's any vulnerabilities in that computer code, then a hacker can just get in there and take it all. Yeah. Dan, tell me what you do.
Sure.
Why it's important as we're talking about this kind of decentralized financial instruments? And then also, if you could slip in there, like what's the scale of these sort of DeFi instruments out there these days?
Yeah, sure. So to reflect on the Dow Hack for a minute, that happened in 2016, and this was really the infancy of the Ethereum blockchain and the infancy of smart contracts. If you go back then, there weren't really any tools, there wasn't any guidance, there wasn't any knowledge about security and how to build those contracts in a safe way. So what I did is, I'm running a cybersecurity company. I consult with some of the largest technology companies on the planet to build secure software, and I do research with DARPA to advance the field of software verification. So we found that there was this incredible opportunity to define the space. It was a green field, there was no knowledge, and we could very easily fill it with a lot of the best practices and tools and techniques that we had to help people write secure software. So today, what we're doing is we work with most of the largest DeFi protocols, most of the largest blockchain software companies, and we help them write secure software so they don't get hacked like the Dow did.
Okay, so then how big is the DeFi marketplace? Like how much money is tied up in smart contracts, I guess, right? That's how you think of it?
Yeah, not entirely sure of exact numbers, and I think it's actually very hard to tell exact numbers, but I've seen numbers thrown around in the low hundreds of billions. So it's not a small amount of money, but it's also not going to tank the economy of the United States if this stuff fails.
It's not the housing market.
Right.
But it isn't chump change.
No, I mean, a lot of people would be very upset to lose $200 billion.
Right. In a sense, though, the greatest ideas and idealism behind decentralized finance is that we don't need banks anymore. Fuck them. We can just write code that rules and shit. That's sick.
So what it's done is it's put a spotlight on security, because the safety of your investment and the ability for these finance bots to operate correctly is totally dependent upon the security of the code. There isn't really a good way to get remuneration when you've lost the money, right? Which I would argue with a little bit, because there have been plenty of people that have been, quote unquote, brought to justice who have hacked into things, and also a lot of really nasty criminal groups that have sort of tried to depend on the privacy guarantees or lack of guarantees around blockchain software, but the FBI and other law enforcement agencies are still able to find them. But regardless, a lot of this comes down to the security of your software. And as I was joking before, there really isn't a lot of faith to be placed there. So it's required this shift in the way that you think about building software, where instead of thinking about vulnerability mitigation, around acknowledging that software is not safe and thinking that you can kind of improve it over time and we can monitor it for when it goes wrong, that's completely insufficient for this field. Instead, you have to have this pinnacle of perfection in mind. You have to think about eliminating every opportunity for something to go wrong. And that's not something a lot of regular developers have experience with. So this is a really interesting development where I think the blockchain field is actually encouraging a lot of research and development in software security. It wasn't the intention, but that's what it's done.
It's a bug and a feature is what you're saying.
Yeah.
All right, so let's go back in time and talk about what are the typical hacks, scams, and other things that affect DeFi stuff.
For DeFi, there's a lot of accounting related issues. For instance, if you have a system that performs a swap, for instance, earlier this week, there was a system where it allowed you to swap two currencies for each other. But in this case, you could swap the same currency for the same currency, and in doing so, inflate the value of it. And then with that inflated value, you can use it to cash out all the other deposits within that DeFi system. And pulling off that attack is instantaneous. It takes about one transaction, 10 seconds worth of processing time, and you're done. On the other hand, there's lots of problems around collateralization. If there's not enough liquidity and there's not enough tokens being distributed in a system, it starts to behave kind of wonky. There's all kinds of problems around trusting external data sources. If you want to get the price of an asset and trade with it, you need to know what that price is. The finance bot needs to know what that price is. Where does it get that price from? And there might be opportunities to manipulate a data source that's secondary to the one that you're using, but that, regardless, at the end of the day, influences how it operates. There are a lot of potential to go wrong.
Those sound pretty weedy and interesting, and I can totally see how complex and crazy it is, but there are simple ones, right? Like the rug pull or
Oh, there's much simpler ones.
Tell me about the vanilla chocolate strawberry of fucking around with DeFi.
Okay, the easiest ones are the big elephant in the room is that most DeFi projects are not decentralized. The D part is a misnomer. Most of them are actually very centralized, and there's usually a single person in charge of the private keys that can operate that DeFi system. So what a lot of hackers do is they go and they hack that one person and then use it to manipulate the functionality of the DeFi system.
Give me an example of when that happened, or if it happened.
I'm kind of at a blank.
Monkey jizz.
There we
I'm
go.
sorry, did you say monkey jizz?
Yeah, that's the one, a recent one. It was just essentially a rug pull, right? It's they were trying to get people to trust them, so they had one guy whose identity was de-anonymized, right? Or he was doxxed, and he was like, okay, I'm the public face of this. You can trust me. We're going to build all these products. We're going to build like this amazing ecosystem. It's going to be a jungle for all you monkeys to play in. Essentially, it was the marketing pitch. And as soon as close to $1 million got put into it, I think they made off with a few $100,000, and then that's it. And then once
that's just a basic confidence scam.
Yeah, but there are also ways that you can ensure that people can't get out as you're emptying the treasury. Like what they did was they put in or introduced like a fee to sell. So that as the value was crashing, you would have to pay out you'd lose 97, 98% of the value of the thing that you're holding, or the token that you're holding. So no incentive to really sell, or some people are not going to, if you're going to lose 97, 98% of it, even as the price is already falling, you're not going to sell. Maybe you'll wait and hope that the price will bounce back a little bit, and then you can exit.
More stories. I want to hear more of these.
Well, here's the thing with the rug pulls is that they can happen because there's an operator of the DeFi protocol or the smart contract in general that's turned malicious, or a hacker can do the same thing if they have the opportunity to. From a user's perspective, it's absolutely no different. And a lot of these systems aren't built with the safeguards in mind of, well, let's find a way to limit the potential of loss, limit the blast damage if a bomb gets lit off, right? Like, what is the maximum loss that can happen if the person operating the blockchain goes bad?
Right.
And that kind of forethought is just hard to find.
So
you want more hacks.
I just want more hacks because the stories are incredible, right? First of all, the name Monkey Jizz is crazy, and I love it.
I'm shocked that was a scam.
Charlie, do you have a favorite one? A good story to tell us about a crazy ass hack or scam?
Well, the amazing thing is that a lot of these hacks are probably performed by the team behind it, right? Because no one can tell that it's actually hacked, or they just did it themselves. They pretend that it was hacked and they just did it themselves. I think there's one hack, I forgot what the name was. It was very similar to Monkey Jizz, but where they took in like tens of millions of dollars and just rug pulled everyone, and then just put a page up. They turned their website into a page that says like you got punked or something like that. Basically just making fun of everyone that lost money. And that happens all the time.
But this is the equivalent of investing in a private equity fund and then having the principal of that fund just be like, bye, I'm going to the Cayman Islands.
There's no governance here. Yeah. So I think what a lot of these organizations...
The difference is that a lot of these teams are anonymous. Right? You just don't know who they are. So you can't really do anything legally about it once you got scammed. And it's just amazing how much people trust these anonymous teams.
Yeah, that's also another point also to what you're saying. Then some people say, okay, if we just make our team public or de-anonymized, then that's enough. But that's not actually enough to do anything to make sure that your coin is safe. You could do a fake identity if you really were serious about it. You could make it off to seem as if the team had nothing to do with it, and so the person who was who's the public face of it or the public team is excused or looks to be innocent in it. It's not simply enough to just put faces on it. But I think that one thing I saw in that week of Monkey Jizz, there'd been 5 or 6 rug pulls of the same variety, where it's okay, maybe one person was known, right? But more or less it was the team that just got together and said we're going to take the money now.
And so when you call it a rug pull, you call it a rug pull because the rug gets pulled out from underneath the investors.
Yeah. So there are 2 places on the internet that you can go and find the extraordinary number of hacked smart contracts or stolen private keys or essentially failed blockchain projects due to security issues. There's one called the Blockchain Graveyard, which has lots of tombstones. And then there's the Wrecked Leaderboard, which is another one that's very specific to DeFi. But there's really no shortage of incidents. I think one of my favorites is probably the Parity Wallet, which was a system for people to store their cryptocurrency, but it all depended on the same smart contract. And when somebody found a flaw in it, they couldn't exploit it to steal anybody's cryptocurrency, but they could exploit it to lock everybody's crypto assets in place so they couldn't withdraw them. So that would be a griefing attack. That's where you're not actually standing to gain anything, you just want to cause a ruckus. So this person issued that single transaction that locked everybody's cryptocurrency, and then everybody had their assets stuck. And that's another thing that you have to pay attention to, is that yes, these systems are highly economic in nature, but there are some things that you don't need money to motivate you for. And griefing is definitely one of them.
Griefing isn't like you're just causing people grief.
Yep.
I like going through the etymology of these terms. Sorry, Charlie, go ahead.
The thing with the Parity attack was that Parity was created by Gavin Wood, which is one of the founders of Ethereum. Right? So people actually trusted him a lot. I mean, he's a really smart guy. They trusted this wallet, this multi-signature wallet, so much that they put millions of dollars into it. And after this attack, they basically lost money, right? And people talked about doing hard forks on Ethereum to free up that money. I don't know the current status of that is, whether or not they actually went through with it. I don't think they did. So the money is just like locked there, and it's sitting there, and everyone can see it. It's still there. That's the worst part, right? You can see on the blockchain your money is there. You just can't access it, right? Just the code does not allow you to sign a transaction to move that money. So the money is just stuck there.
And remind me why this is cousins to an altcoin. Is because these smart contracts are based on tokens, and those tokens are effectively like an altcoin of themselves?
Well, I think you would say that Ethereum is the altcoin.
I see.
And then Ethereum has some special properties to it, which is that it has a smart contract language. It has this execution layer on top of it that allows you to write finance bots. Whereas there are other altcoins that don't have that. But really, I think people have understood that a lot of the more innovative use cases for blockchain are facilitated by smart contracts. So pretty much anybody building a blockchain these days is going to also build a smart contract layer on top of it.
How do people know about these hacks? Like there's those two places that you're talking about, but what is it like when one of these happens? And like, what is the reaction of investors? Does Twitter go crazy? Does Coinbase go crazy? Like what does the community think every time one of these things happens?
I mean, I think there's an overwhelming consensus, and you know, Charlie's mentioned this, and you've mentioned this a little bit, is that there's no way to do this right, and that this is just yet another gravestone in the blockchain graveyard, right? So I think that's the general consensus of like industry sentiment around this, that these are complex financial products, that they blow up frequently, do it at your own risk. However, from an insider's kind of expert perspective, I see it as a little bit more nuanced, because there are a lot of projects that people depend on in the DeFi ecosystem that have not suffered these kinds of attacks, and they're more complex than the ones that have. So what I see is that there's this kind of bimodal distribution. There's haves and have-nots when it comes to security. And what you hear about the have-nots. And the haves are hard to come by. They've invested a great deal in order to reduce the risk of whatever it is that they're working on. But obviously they want to keep their head down a little bit and not like hold up a flag, or rather a big kick me sign that they're doing a good job.
Because they become a target.
Yeah.
And then who are the people doing the hacking? Because it's, oh, sorry, Charlie, go ahead.
The problem is the haves can become have-nots pretty easily, right? For example, the compound issue, they were doing really well, no issues, but then they did an upgrade.
Ooh, tell me about this story. Start from the beginning. Who are these people?
Compound, right? It's a coin that
lending protocol.
And they do like lending protocol, right? There wasn't, I don't think there were any issues with Compound. They were doing really well. And then recently, I think like a month ago, they did an upgrade, and it wasn't tested well enough. They basically upgraded the whole system, and the upgrade introduced a bug that let people withdraw coins that they didn't own. So it basically caused havoc, right? People were withdrawing coins that were owned by other people, and they were just taking it out and cashing them out, right? And then the Compound CEO was just begging everyone to return the coins. And I don't know what the latest, I think they have like an insurance fund to kind of pay everyone back, but it's just an example of something that is just so complicated that even someone who was, even like Compound, who was known to be really solid, can introduce a bug that really destroys the system.
All right, I want more hacking stories, but yes, continue to follow up.
The thing that Compound really exposes is that, yes, like they did an excellent job up until that point, and they adopted the vulnerability elimination approach that I think I spoke about before. But once they opened up the system to more decentralized governance, that means that more people have a voice to say as to where the protocol goes, what features it implements. And not all of those people are in the same boat when it comes to security awareness. And the community itself aren't security experts either. So the potential arose to approve an insecure update. And now I think they've learned their lesson quite the hard way. And they're working backwards to figure out what should the approval process be for new governance proposals, and how can we secure them to make sure we maintain that approach going forward. So all of these things are, there are many ways these systems can fail, and even though it's supposed to be code is law, and there's only one correct definition of a smart contract, they tend to actually change quite a bit. People issue upgrades, they make version 2s and version 3s, and they minorly tweak parameters that change the way the system operates that can expose you to new risk. So it's very careful. You're always walking on the edge of a cliff.
When you work with firms that are doing projects where they want to have some sort of governance, including the community, are you seeing that over time they're shifting from having the community have input in things that would open up insecurities? Or is it just like a fine line and you have to you let the community have input and then you review it yourself and then decide what would actually be security risk?
Yeah, I mean, the governance thing is quite interesting because there are a lot of people that are very invested in making sure that these proposals are done in a secure way. There might be it's actually an opportunity for venture funds to buy back into the whole DeFi ecosystem. So you might see Andreessen Horowitz with a huge bag full of a given token that enables them to have a much larger say than everyone else in terms of what goes next. And those people have a vested interest in making sure that the protocol remains secure, right? As a venture investor, as any person that's holding a token, you're trying to maintain a bunch of different kinds of risk. There's market risk, there's intellectual property risk, there's security risk. It all depends on how the community evolves. And I think there are some communities that are ahead of the game because they've learned a hard lesson, like the Compound folks. And there's a bunch of other communities where they've raced to decentralize, and then they don't actually have a way to, for instance, press a pause button when the system starts to behave like haywire. So there's risk and reward here, but a lot of it is risk.
This does seem to cut against some of the basic precepts of decentralized cryptocurrencies, or just the concept of decentralization, because with the Bitcoin model, the argument is made that decentralization is what actually enhances security, because everyone has it, on their servers or whatever. But here, the more people that have a token in any given smart contract, the more risk for differing desires for level of security, for motives and whatever and whatnot. So the cracks seem to appear even more so. So when we talk about smart contracts, we talk about decentralized finance, is it just a misnomer here? Are we just talking about esoteric financial instruments based upon a technology that nobody understands? Maybe you do. And yeah, people are gonna lose money, but some people are gonna make a lot of money, I bet.
Yeah, you can buy a voice. That's what it comes down to. And that's why flash loans are so powerful, because you don't even need to have the currency yourself to get the loan to buy the voice. And then you can use that to manipulate the system that you're operating in.
Which one might argue is a perfectly libertarian paradise, because money equals voice equals power,
right.
And that's it.
Yep.
But one could also argue that's just power being power, regardless of what you call it.
Yeah, I mean, that's the premise of Liberland, right? Of the argument they lay out there in that area where they want to create a sort of crypto state, right, or a crypto community. Is that you should have more of a say the more money that you have, right? You earn the money and you're putting it in the community, and so that's your stake in there, and you should have a larger say, right? And so I can see they're explicitly, I guess, libertarian, right? But that ethos does bleed in, right? And leads to like you said, VCs and other savvy actors interested in steering the direction of this protocol or this project in a way that benefits them themselves, right? Because they have the money to do it, they have the capital to do it.
And that might track in some ways to market power, as the same way when Goldman Sachs does a whole bunch of work, that might affect the way that the S&P goes. Right?
It could, but there's also another take on this, and I think that a lot of people think that blockchains are very decentralized, even the layer ones. But in practice, they're very, very centralized. Even Litecoin or Bitcoin or any of these other systems that are widely known, how many developers are actually committing to their GitHub repositories? Where are the miners located? In what countries? How is power distributed that way? And when you look at it, you find that actually it's very aggregated, and there are some people that can very easily manipulate the outcomes for layer ones as well.
So that leads to, I think, the inevitable question when you talk about this stuff, which is regulation, right? As you said earlier, this isn't big enough decentralized finance to tank the economy. And the only way that regulation happens is when a systemic risk becomes so systemic that it affects everyone. Pensioners, from unions, or your mom and dad. This is still kind of like in that weird little space where only people in the know about it, and yet people are still losing money. So let's talk through the concept of regulation here. Is it too early? Does it even make sense? Or should we? Because I might go on the internet and download the extension for my Chrome app or whatever and find myself with a prospectus of a decentralized smart contract that's pegged to the weed dollar in, Northern California, and then I get a trade for fucking Dogecoin. I'm like, that sounds great. Here's $150 million that I don't have, and lose it, right? So is there enough of a consumer base that we should be regulating this? Or is this the Wild West? And if you play in the arena, good luck.
I think, I think it was the currency controller who, 2 months ago or 3 months ago was saying that they're looking at regulation of decentralized finance, specifically exchanges, but also of stable coins, which are cryptocurrencies tied to some other asset, like the dollar, pegged to the dollar, because the group that is the most exposed to risk would be underbanked minorities. And so the concern there is that, the currency controller is the top watchdog for the banking system in the country. And so the concern there is that the banking system isn't covering them. They're trying to go into another financial system, and then they're exposed to unregulated risk. And then I think also
there's 2 points there, right? Which is one, on the good side of all this DeFi stuff is unbanked folks might have a better opportunity to have some financial institution. You couldn't even call them banked though.
Yeah, I mean that's the thing. If you aren't banked and you're working within this financial system, yeah, you're not banked because deposits are not insured. All of these trades or all of these assets or all of these protocols still have some underlying risk in them. Mm-hmm. It's still, I feel to a great deal, it's all speculative, right?
Here's who we're protecting. It's remember that grid that's knows what crypto is, invests in crypto, doesn't know what crypto is, invests in crypto. We're trying to protect the people who don't know what crypto is and invest in crypto from going down the primrose path to these DeFis and be like, ooh, it sounds like even better. But that's just a quarter of the people who invest in crypto, or actually just half. Sorry, my math is terrible, but you see what I'm saying. Is it enough people? Are there enough people out there who are getting screwed over by this DeFi stuff to even make it worthwhile to regulate it?
I would say so. I think even, like we're talking about here, it's still low hundreds of billions of dollars. I think the question then is what type of regulation and how to make sure it's actually good regulation, I guess, from the perspective of if you want to preserve the technology, if you want to preserve potential to provide some sort of financial services to people, then how do you do that in a way where the regulation doesn't undermine it? Or do you do an overhaul of the whole entire system, in of itself?
You just need a spell check for the software, right?
Right.
Yeah, that's it. Solved.
The real problem is you can't really regulate DeFi, right? So you can only regulate the on and off ramps. But once people get into, once you have Ether, you can interact with DeFi protocols to exchange it for any tokens you want and do loans and do anything in the DeFi space. No one can really stop you, right? In that sense, it's decentralized.
It's
right? So you
freaky
can't
deaky.
really regulate that.
I think, well, if they try to change it, or if they try to redefine it as a security, right? I think that's what they've been looking at. One of the ways they've been looking at trying to regulate economic activity. The idea that okay, we would require any sort of holding or exchange with a certain amount to be registered. There's certain type of transactions or trades that would be outlawed or prevented from being allowed to operate. Or if they are operating, then you have to have, then the institution that has them has to have this or that, either certification or amount of money in the bank. But
so first and foremost, then you'd have to catalog all the different kinds of contracts and ideas out there of what to do.
So I think I'm in the same boat as Charlie here, where the place that the countries are going to press very hard is going to be the on and off ramps. Mm-hmm. Once you're actually on the chain, it's hard to figure out what's going on. But what I do anticipate is I do anticipate certain countries throwing their weight around with network-level attacks on layer 1 blockchains. So network-level attacks would be like performing a denial-of-service attack that takes down a certain blockchain when people on that blockchain are performing services the country doesn't like. For instance, China has a lot of regulation now where they really don't want people to use certain blockchains. And they've decreed that, like, well, people shouldn't be mining stuff. We want to use our power for other purposes. And they've done that from a regulatory standpoint, but they could also do that from a technical standpoint, sort of the same way the Great Firewall of China works for browsing the internet. There's an analogous system that could be created for how blockchains operate.
That's like regulating with a sledgehammer.
Yes. But I do anticipate that sort of thing could happen in the future, even though it hasn't happened yet. So there are plenty of opportunities that are creative, that are innovative, that the government can employ to make sure that its will gets expressed on the blockchain. It's not just a lost cause. But
it's like the SEC is the Securities and Exchange Commission?
Yes.
So are these securities maybe like?
I mean, well,
it is an exchange.
They're like vaguely aping at some of them being securities. They haven't really defined or laid down. Like they had like this weird public spat with like Coinbase over a service that they were trying to offer and whether or not the service qualified as a security, but didn't really clearly define it. And then Coinbase ended up pulling it anyway. And so I think, until they actually take a step or, try to choose a hill to die on in terms of a definition, it's going to be a lot of nebulous, experimentation or stabs in the dark, it feels like.
Well, and I'm sure that there are some very smart people at the SEC or who work for, the Treasury Department, but the people who know this stuff the best are the people in the industry itself. So wouldn't we expect any kind of regulation to be industry-led, which is to say—
What do you mean, like self-regulation?
Like toothless, basically, or just, enough to, pat everyone on the back to say, good job, now we're a, regulated marketplace, but not enough to protect my uncle who might, by accident, invest in one of these decentralized financial instruments, not know what's going on, and lose his retirement.
I don't think that's a guaranteed. I mean, these kinds of government agencies, they can buy the help, right? Like other people can collaborate with them to produce the sophisticated guidance or rules that they need. And there's a lot of service providers out there. Like one thing about the blockchain is that it never forgets. If you want to go back and bop people on the head for not paying their taxes, at some future date, that bill might come due.
Damn.
Because there are services like Chainalysis or other kinds of investigative services that are very easy to de-anonymize people that are using cryptocurrency for things. So I don't think that government here is as toothless or as inept or as incapable of approaching this problem as maybe people believe.
Because it's not senators who are doing it that are septuagenarians or older. It's like people who—
career workers at the SEC who are collaborating with industry experts to understand that problem, with PhD economists from the Fed, with there's people that find this just a fun problem to work on, and all it really takes is one person to start figuring it out to produce those rules.
Can we back up for a second and talk about the best case scenario for these decentralized financial instruments? Like, sell me on the potential for them to be good for the marketplace of different financial instruments out there. Anyone?
So,
I mean, Charlie doesn't like them, so not you, Charlie.
I mean, I like to look at this as and I kind of got to this before, where the whole DeFi ecosystem and smart contracts and blockchains in general are dragging a lot of related fields along with them in very interesting ways. For instance, another field that is dragging to public use is this whole field of zero-knowledge proofs and really what you'd call modern cryptography. I think for the longest time, modern cryptography were these ancient things like PGP and sending encrypted email. And I didn't really see these big innovative ideas that cryptographers in academia were talking about being deployed on real life systems. But today, what the blockchain has done is created this incubation chamber for a lot of these more exotic cryptographic ideas and produced incredibly innovative results for them. They're able to do them quicker. They're able to apply to different transaction types. And it's attracted a lot of investment into continuing to advance that field.
So it's a mid-stage Wild West that's a Cambrian explosion of potential risk for a lot of people that could, in 5 or 10 years, maybe have a product that comes out of it that advances cryptography, which is the way that we organize data securely.
So it's about privacy preservation, in fact. So the field of cryptography, the subfield of cryptography that's advanced the most from blockchain software is privacy-preserving encryption. So this is a direct result of the fact that every transaction on the blockchain is public.
Sure.
And you can go back in time and you can see it. So they've necessarily had to invent ways to keep those transactions private, but remain in a trustworthy system where people just can't, steal things without knowing about it or mint their own tokens. And that's required these zero-knowledge proofs and other sorts of technology to be invented.
I mean, that convinces me in some ways, right? Because right now, privacy in the public sphere equals a bank account in the Cayman Islands, right? It hide the money, basically.
Yep.
Right, so this is a way of being like, oh, we can be private, but also we can see where everything is. Anyway, that's a down the road idea, and I think this comes back to something we talk about a lot, which is the cryptocurrency and blockchain world of today isn't going to be what we experience in 20 years, much in the same way that the internet isn't the same as it was 20 years ago. So if we think about the grand arc of history of cryptocurrency from, amazing altcoins like Litecoins to straight up bullshit coins like Dogecoin that became super successful to this new innovative field of decentralized finance, where are we on the road to somewhere else?
I think we have one really big use case right now, and it's pretty unfortunate. It's ransomware. There are a lot of different people that are making effective use that have created new opportunities to use the blockchain to hack into and extract value from real world people. So that's one area that I don't think I would consider a success, but it is a real thing that's happened. Mm-hmm. And it's worth acknowledging because it is a big problem. And I think another trend that you want to look at over the long term is how will that influence the development of secondary technologies to deal with ransomware? Because that's going to influence people that can track transactions globally much more, right? It's going to influence the regulation of on and off ramps. It's going to influence the kind of features that different blockchains produce or don't produce or allow or don't allow inside of their blockchain. Like right now, Zcash is a privacy-focused blockchain, but they don't allow private transactions by default. So, there's a lot of ways that sort of trend interplays with the development of the field. And it's a very big one. When most people, I think, outside of DeFi traders think about the blockchain, they think about ransomware.
Charlie, what do you think? Because you made Litecoin, which is kind of great, right? And you're seeing all this shit unfold in front of you, and you've expressed your opinion on DeFi stuff. But where do you think it's heading anywhere that will be of use?
So I can talk a bit about the end game or end goal of DeFi is to kind of replace the legacy financial system, right? To replace it with something that is decentralized and fair, and everyone can participate, and no one is blocked from participating. So kind of the idea is, so today, if you want to get a loan for a house, it's a totally centralized process. You have to find a bank who can check your credit history, give you a good rate. But in the DeFi world, you can imagine where your credit history is out there, right? It's on a blockchain somewhere. So a smart contract can check your credit history, can give you a loan, and give you the rate that you deserve, right? So that's fair for everyone, and you can do it without any single third party or counterparty, right? You can do it all in a totally decentralized way. And that's kind of the holy grail of DeFi, where anyone can interact with a financial system, get loans, bank with it, get interest, and all this other stuff without any counterparty risk. Assuming there are no hacks, and because it's fully decentralized and there won't be any rug pulls. But that's kind of the ideal case.
Okay, so then the financial system as we exist today is heavily insured, right? Not only is there the FDIC, which insures individual bank accounts up to $250K or some shit like that, and then there's if mortgages go under, you buy the banks buy insurance off of that. It's very safeguarded. And if you're saying to me, and you're saying this, and you're saying this,
you can also build that, right?
You can build that.
You can also build insurance into DeFi, right?
Interesting.
People have.
But I'm hearing from you is that the software itself is not to the point where it could support, say, our entire financial system. And it shouldn't, because it can be schemed in so many different scammy ways that we've talked about.
That's the ideal case, right? I think we may never get there because I think that being fully decentralized is at odds with being fully secure. So because of that, we may never get there.
How do you respond to that?
Good question. It depends, right? Like you can have secure code. You can have code that's been securely implemented that does what you expect it to. But when you have decentralized governance and you're giving decision-making ability to a group of whoever holds the token, then again, the voice that you have is based on who bought the token. So it's kind of a question of it's very hard to define. Mm-hmm. But I don't think security is by itself kind of an unachievable goal. Like we have these systems that are highly verified, that have public security properties, that describe kind of on the tin exactly what they're capable of doing and no more. Mm-hmm. And that component could be used by a person in a way that is safe.
Sounds like we need accountability here, because like I could do a bunch of regular scamming and I'll go to jail, right? But if I do some blockchain DeFi scamming, it sounds like I might not go to jail.
I think your ability to get away with it on the blockchain is a little bit higher,
right?
Because of the nature of the attack. You expose a lot less of yourself. You can create an anonymous account, and then from that anonymous account, you can issue your transaction, take your currency, and there's a lot of different systems out there to help obfuscate where the currency goes after that. There are tumblers, there are mixers, there are zero-knowledge proofs that you can shove it through so that when it comes out the other end, it's kind of unclear exactly where it went. Mm-hmm. However, the efficacy of those systems is kind of unknown. Like, how likely is it that 5 years from now, somebody can de-obfuscate one of those mixers? Or how likely is it 5 years from now, we find an error in the math that was used for the zero-knowledge proof, and then all of a sudden, all the house of cards falls down, and you can bring somebody to justice if you feel like it.
Well, I mean, okay, I'm just gonna do one big sweeping historical analogy here, which is just like the Wells Fargo wagon. Like, I'm sure a lot of those wagons just made off with people's fucking money. You know what I mean? I mean, not to mention Wells Fargo did some bullshit centuries later. But what I mean to say is that like the technology of the bank has existed for a long time and people have taken advantage of it in numerous different ways, but we've found a generally workable solution on a massive scale where we can all basically, put our money into a bank and be like cool with it not going anywhere. And like, so I think the right answer is let's just wait 50 years and maybe we'll figure this shit out, right?
Possibly. Or we could decide that getting security in this kind of system is impossible, that actually you can't write secure software. And I mean, it also depends on human factors. Like because people are chasing a deal, and if somebody creates the brand new amazing shitcoin and launches it, they're not gonna wait for the security proof to come from me to tell them, okay guys, this is totally cool to invest in, like everything's safe. They're just gonna go for it because that's where they get the money from. Mm-hmm. They wanna get in early. So I think there's always going to be this kind of undercurrent of small little explosions happening on a regular basis because there are people that just don't want to wait.
Well, thank you guys for joining me today, and thank you at home for watching. That's it for us. We'll see you next time.